Senate Committee on Banking, Housing, and Urban Affairs will come to order. We'll hear testimony today from three key financial regulators whose agencies are responsible for protecting our banking system and making sure it serves all Americans. The hearing comes 1 week after the release of the independent review of sexual harassment and workplace misconduct at the FDIC. A review made clear that FDIC has serious, long-running problems. For far too long, its leaders failed to take action to protect the FDIC's most valuable resource, that is, its workers. The review details episodes of harassment, discrimination, other misconduct that no one should ever have to endure, especially in the workplace, and that can never be tolerated, period. Chair Gruenberg, you owe workers at the FDIC, at this committee, and the American people clear answers and decisive action. That includes your plan for restoring the FDIC's culture and regaining the trust of your employees. The steps you'll take to put an end to workplace misconduct, harassment, and discrimination, and to ensure that victims are not silenced, and how you will ensure that perpetrators are finally held accountable. The FDIC can't fulfill its mission of maintaining stability and public confidence in the nation's financial system until the issues raised in the independent review are fixed. Failure is not an option. Chair Gruenberg, I hope you recognize this moment for what it is, a crisis. Every FDIC employee, every American deserves a workplace free of harassment and discrimination. And the public should be able to have confidence that the people at this agency can focus on their jobs. When workers face a toxic culture, it hurts the agency, it hurts its mission. Workers don't speak up when they spot problems if they're afraid of retaliation. It's not a small internal problem, it affects the public. Most Americans don't think much about the FDIC. They shouldn't have to. That's the whole point, for people to have confidence that their money is safe in the bank without having to give it any thought. And that's why the job of this agency is so crucial. The FDIC prevented the Great Recession from becoming a Great Depression after the 2008 financial crisis. The FDIC's action was crucial after the collapse of Silicon Valley Bank, and Signature Bank threatened to create a domino effect of bank failures. We need an effective, strong leader at this agency to ensure that its workers can continue to protect Americans' hard-earned money and savings. Chair Gruenberg, it's up to you to prove to the public and to your employees that you are that leader and are able to restore confidence at FDIC. The management challenges at FDIC only make it that much harder for the agency to focus on the crucial work it's doing, along with the Federal Reserve and the OCC. In the last year, since the collapse of SVB and Signature Bank, your agencies have helped make our banking system safer and more resilient. The Fed, the FDIC, and OCC issued the Basel III endgame capital proposal to protect Americans from another financial crisis. We must ensure the largest banks have enough capital to prevent another taxpayer-funded Wall Street bailout. That's what these rules do, and they make sure that banks can continue to lend to their communities in good times and in bad. The proposal recognizes the systemic importance of large banks like Silicon Valley Bank that are not as big as Wall Street mega banks, but still can do real damage to our economy when they fail. Of course, the industry and its allies on Capitol Hill have trotted out the same old, tired, and always well-funded arguments. The reality is that the largest banks have been telling their shareholders and Wall Street analysts that they'll be able to handle the capital rules without a problem. They've bragged about how they've remained wildly profitable, all the while comfortably meeting the projected capital levels required under the proposed rule. If this all sounds familiar, this committee hosted the CEOs from the biggest banks last fall. We've done it now 3 years in a row. Not a single CEO of the country's largest banks told us they'd be unable to meet the capital levels required under the proposal. That's why it's imperative that your agency finalize a strong capital rule that protects Americans and doesn't reward Wall Street's whining. The FDIC and OCC are also working to rein in the risky incentive-based compensation structures that have time and time again brought our banking system to the brink of collapse. Wall Street firms set up a system that rewards traders for exactly the kind of risky behavior that serves no benefit to the economy and just puts other people's money at risk. We saw it in 2008. This model essentially tanked the economy and ruined people's lives. We saw it again with the failure of SVB last year. This new rule can't go forward without the Federal Reserve joining the process. The Fed must know what's at stake. Its own report on Silicon Valley Bank noted how incentive-based compensation encouraged excessive risk-taking that eventually led to the bank's failure. Mr. Barr, I look forward to seeing the Fed join this effort as soon as possible. We've talked extensively about the importance of that. It's also why the Senate must pass our Recoup Act. Which this committee passed last year, ranking member and I and our staffs wrote it together 21-2 to ensure reckless executives who wreck their banks face real accountability. Finally, we need action to address alarming trends in the banking industry. Over the last several decades, we've lost thousands of banks while the largest ones have grown to control hundreds of billions or even now trillions in assets. A strong merger review process prevents banks from growing dangerously through acquisitions or mergers. Americans can't afford mergers that pave the way for banks to take out competitors, to close branches, to lay off employees. We've seen that in Louisiana and North Carolina and South Carolina and South Dakota. You're South Dakota, right? And in Ohio and Nevada. Wall Street bankers, the FDIC have begun to review the merger process. I expect them to take steps to fix this. Wall Street bankers crashed the economy in 2008. Americans are still paying for it more than a decade and a half later. It's why your agencies and the women and men who work there remain so important. It's vital they're able to do their jobs serving the public, free from fear of harassment, free from workplace misconduct. And ultimately, you as leaders are responsible for what happens at the agencies which you lead. I expect to hear from Chair Gruenberg specifically on what you plan to do to make fundamental changes to the FDIC and its culture. Senator Scott.
Thank you, Mr. Chairman, and thank you to the witnesses for being here today. There's no greater responsibility that we have as public servants to make sure that we represent the interests of the American people and that we do it well, that we do it with character and with integrity. No greater responsibility. That responsibility starts here and now in addressing what your employees, Chairman Gruenberg, describe as a hostile, abusive, and unprofessional workplace. And Chairman Brown, I think we actually need a single hearing solely focused on the concerns that the employees of the FDIC has with the leadership of Chairman Gruenberg. Because the men and women of the FDIC working to safeguard our financial security deserve a healthy workplace. They deserve to be heard, to be seen. They deserve a safe and equitable workplace. But most of all, they deserve to be treated with respect. We've all seen the 200-plus pages of the special report. We all saw yesterday morning's grilling across the Capitol. And Marty, you've heard me say this to you directly. You should resign. Your employees do not have confidence in you. And this is not a single incident. This spans over a decade plus of your leadership at the FDIC. So I don't need to go into your failures and the complete lack of management while you've been at the FDIC. I want to talk about the people, your employees, and what they have done and what they have had to go through. How can you justify allowing supervisors to refer to disabled veterans as Captain McNasty? We're talking about a veteran who lost part of his leg in service to our country. And to work in a hostile work environment where he is referred to as Captain McNasty is just not just wrong, but disgusting. To think about the chilling reports that say employees and supervisors were permitted to mock the fact that this employee used a wheelchair. What kind of environment and culture? And how long does it have to go on before it becomes commonplace to make fun, goad veterans who served this nation at great personal expense? Or when an employee reported that for a period of 3 years, a senior examiner would sexualize her every time he could. And he behaved similarly with other colleagues and bank employees, including asking to see photos of their daughters and whether or not those daughters were single. But it's not just your management team. You yourself set the example when you were absolutely irate and attacked your employee. Or another FDIC employee stating that they had a meeting with you and it was awful and felt very personal, that employees are made to cry as if it's some badge of honor making your employees cry. And people, after person wanting to quit. Others described your conduct as embarrassing and inappropriate. And one person said they'll likely be demoted. And if this is what it takes, they're out. One thing I learned from running my own business is that if you don't take care of your employees, they can't take care of the customer. And the customers of the FDIC, they are the American people. Mr. Gruenberg, during your hearing yesterday, you stated that it doesn't matter if you believe that you can change the FDIC's culture. It matters if the employees believe that you can change the FDIC culture. They don't. Whistleblower after whistleblower, employee after employee have drawn the same conclusion. I would like to submit for the record a statement, Mr. Chairman. I'd like to submit for the record a statement from a collection of FDIC whistleblowers expressing their lack of confidence in Mr. Gruenberg's ability to change the toxicity of the agency and their doubt that he is the right man for the job.
Without objection.
Leadership carries with it the responsibility of stewardship. Your sheep are lost and your fields riddled with weeds. In 2021, President Biden warned his staff, if you're ever working with me and I hear you treat another with disrespect, I promise I will fire you on the spot. And he did. He fired the Inspector General, Martin Dickman, of the U.S. Railroad Retirement Board for evidence that he created a toxic work environment and engaged in abusive treatment, including using crude and inappropriate language like slurs and belittling employees. I know I'm out of time. And the FDIC, in their special report, described you as harsh, aggressive, and interacting with your staff in a demeaning and inappropriate manner, having a temper and causing employees to feel disrespected, disparaged, and verbally attacked. I can only conclude with one question. What makes you so different than the Inspector General? Is it politics? Is it the fact that you are a necessary and easy vote for the Biden administration's economic policy agenda? I think the answer is yes.
Thanks, Senator Scott. Thank you for your remarks. I think we can agree that no public employee, whether in the White House or the FDIC, should ever criticize or make fun of a disabled veteran. We'll hear testimony today from the heads of 3 federal banking agencies: Michael Barr, Vice Chair for Supervision at the Board of Governors of the Federal Reserve System; Martin Gruenberg, Chair of the Federal Deposit Insurance Corporation; and Michael Hsu, Acting Comptroller of the Currency, Chairman Todd Harper of the National Credit Union Administration, originally intended to be here, but is unable to join us due to extenuating circumstances. I ask unanimous consent to enter Chair Harper's statement into the record without objection. Thank you. Thank you, my colleagues. Thanks for the witnesses for your service and your testimony. Vice Chair Barr, please proceed.
Chairman Brown, Ranking Member Scott, and other members of the committee, thank you for the opportunity to testify on the Federal Reserve's supervisory and regulatory activities. Accompanying my testimony is the Federal Reserve's semi-annual Supervision and Regulation Report. Today, I will discuss current conditions in the banking sector, supervisory activities, and some of our recent regulatory proposals. Overall, the banking system remains sound and resilient. Banks continue to report capital and liquidity ratios above minimum regulatory levels. Overall asset quality remains generally sound. Capital ratios increased throughout 2023, leaving the system better positioned to weather potential losses. Liquidity conditions overall are stable. Notably, liquid assets on bank balance sheets remained above their 10-year average throughout 2023. Additionally, there has been a decrease in the share of uninsured deposits in the system. However, both supervisors and banks must remain vigilant and ready for expected and unexpected stresses, as presently there are several risks we are monitoring. For example, delinquency rates are rising among certain commercial real estate loans, such as those backed by offices, and some consumer loan sectors. CRE delinquencies are now at a 5-year high. Credit card and auto loan delinquencies have been rising. In response to rising delinquencies, banks have increased loan loss provisions. On this basis, combined with their capital positions, the banking sector as a whole should be prepared to absorb loan losses that may materialize and continue fulfilling its vital role providing credit to households and businesses. The Federal Reserve continues to monitor these conditions carefully. It has been a little over a year since the sudden failure of SVB and ensuing stress in the banking system, events that highlighted the need to improve the speed, force, and agility of supervision to better align with the risks, size, and complexity of supervised banks as appropriate. We have been making progress on these goals. First, we are working to ensure supervision intensifies at the right pace as a bank grows in size and complexity. Second, we are modifying supervisory processes so that once issues are identified, they are addressed quickly by both banks and supervisors. Third, we are finding ways to better incorporate forward-looking risk analysis into supervision. The lessons learned from SVB are not only applicable to our supervisory framework. Certain aspects of the failure show that enhancements to our regulatory framework would benefit the safety and soundness of our banking system. One of these enhancements was already in process several months before SVB's failure through an advance notice of proposed rulemaking, expanding the application of long-term debt requirements to additional large banks. Subsequently, the board, the FDIC, and the OCC followed up with a proposed rule that would increase the options available within the resolution process and enhance financial stability. We are going through comments now that we received on this proposal carefully. Another important area is liquidity risk management. A striking feature of last year's bank stress was that SVB, Signature, and First Republic struggled to cope with unprecedented deposit outflows. Banks found it difficult to monetize their held-to-maturity securities through repo transactions under severe stress, and were not adequately prepared to utilize the Federal Reserve's discount window. We are exploring targeted adjustments to our regulatory framework that would address each of these concerns. The Federal Reserve's lending to banks through the discount window plays an important role in supporting the liquidity and stability of the banking system and the effective implementation of monetary policy. We are reaching out to a wide range of depository institutions of all sizes to learn from their experiences with the discount window in order to improve our operations. Turning to capital, a safe and sound banking system is crucial to a healthy economy, and capital is foundational to safety and soundness. A well-capitalized banking system reduces the probability that stressful conditions result in financial crises, which inflict devastating economic costs and suffering for families and businesses all across the country. Since my last testimony, we have received numerous and meaningful comments on our capital proposal. We also received additional data. We are closely analyzing this information, and I expect we will have a set of broad material changes to the proposal that allow us to have a broad consensus in moving the proposal forward. The changes will enable us to have a safer financial system that better serves American households and businesses. Thank you.
Thank you, Mr. Barr. Mr. Gruenberg, welcome. Proceed, please.
Thank you, Mr. Chairman. Chairman Brown, Ranking Member Scott, and members of the committee, thank you for the opportunity today to appear before you today. I'd like to focus my remarks on the FDIC's ongoing efforts to transform its workplace culture. Let me begin by saying that I am deeply committed to the FDIC and its mission, as well as to the people on whom that mission depends. That is why when news reports of sexual harassment, discrimination, and other misconduct surfaced last year, it was essential to gain a deeper understanding of the agency's workplace culture. At my direction, the FDIC initiated an independent third-party review to determine the depth and extent of these issues. Last week, the results of that review, which was conducted by the law firm of Cleary Gottlieb, were released. The review found that for an extended period of time, the FDIC has failed to provide a workplace safe from sexual harassment, discrimination, and other personal misconduct. I accept the findings of the report, and as chairman, I take full responsibility. To anyone who has experienced sexual harassment, discrimination, or other misconduct at the FDIC, I again want to apologize and express how deeply sorry I am. I also acknowledge my own failures as chairman, both in failing to recognize how my temperament in meetings impacted others, and for not having identified deeper cultural issues at the FDIC sooner. I am personally committed to addressing these issues. We accept all the recommendations of this report and are incorporating them into our existing action plan for a safe, fair, and inclusive work environment. To restore credibility with our workforce, we must act swiftly on the report's recommendations and demonstrate a commitment to making fundamental change. For this reason, we have already begun implementing several key recommendations of the report. The report recommends that we identify and appoint a transformation monitor who will monitor, audit, and report on our implementation of the recommendations. We have already begun that process and will issue a request for proposals as early as this week. The report also recommends that we engage an independent third-party expert to support our efforts. We have begun that process and will also issue a request for proposals as early as this week. The report recommends fundamental change to the agency's structure and procedures for receiving and investigating complaints and taking disciplinary action against misconduct in light of the failures of the existing offices delegated those duties. We will do this by proposing the establishment of an independent Office of Professional Conduct, which will report directly to the FDIC Board of Directors. It will be charged with fulfilling these responsibilities, including through the use of outside third parties to conduct investigations. The Transformation Monitor and independent third-party expert will advise us on this proposal. Since December of last year, the FDIC has been focused on implementing its action plan to address all aspects of the issues raised in the news reports last year. The plan represents an agency-wide effort. Many of the recommendations outlined in the report recently received are already encompassed in the agency's action plan. The plan is focused around 3 core elements: providing more support and resources to victims, strengthening our process for reporting and investigating complaints, and improving accountability for anyone who is found to engage in misconduct, including through separation from the agency. The proposal to establish an independent Office of Professional Conduct would advance all of these goals. It is my privilege to lead and work alongside everyone at the FDIC. Our people are extraordinarily dedicated to the agency and its mission. They deserve to have a workplace where all feel safe, valued, and respected. There is no higher priority for me than delivering on that commitment. Thank you.
Thank you, Mr. Gruenberg. Mr. Sue, welcome.
Thank you, Chairman Brown. Chairman Brown, Ranking Member Scott, and members of the committee. I'm pleased to appear today to provide an update on the activities and priorities of the OCC. The overall condition of the federal banking system is sound. OCC-supervised banks in aggregate continue to have strong levels of regulatory capital and sufficient liquidity buffers, though risks from commercial real estate and interest rate exposure continue to warrant attention. Banks and supervisors need to remain on guard against complacency, one of my top priorities for the agency. The OCC's Bank Supervision Operating Plan for 2024 highlights asset liability management, credit risk, and allowance for credit losses, cybersecurity, operational risk, and consumer compliance risk as our key areas of focus. Another priority for the OCC has been promoting fairness in banking. This April marked the 1-year anniversary of OCC guidance to assist banks in managing risks associated with overdraft protection programs. Since the OCC's heightened attention on overdrafts began, the overdraft fees charged by OCC-regulated banks in aggregate have fallen over 40%. Adapting to digitalization has been a third priority for the agency. We recognize, for instance, that community banks may face hurdles in risk managing their third-party relationships, including with fintechs. Earlier this month, the OCC, Federal Reserve, and FDIC published a third-party risk management guide for community banks with examples of innovative approaches to conducting due diligence and assessing new fintech companies. The OCC supports a diverse and dynamic banking system and continues its focus on updating our bank merger analytical frameworks. We remain committed to working with our interagency peers, including the Department of Justice, on this effort. To increase transparency, on January 29th, we released for comment a proposed policy statement on bank mergers. We recently extended the comment period to June 15th. My written testimony provides greater detail on these and other activities of the OCC. As co-chair of the FDIC's Special Review Committee, I would like to address briefly the recently released independent report on harassment and misconduct at the FDIC. The top priority for us all must be protecting the staff of the FDIC and putting people first. The harassment and misconduct detailed in the report are totally unacceptable. The number and scope of allegations, the patterns of misconduct, and the long-standing culture revealed by the review are highly disturbing and need to be fixed immediately. The root causes and recommendations cited in the report provide a clear roadmap for what needs to be done and why. That is where our attention must be focused to ensure the FDIC is a safe workplace for all of its employees. As a member of the FDIC board, I am committed to the transformation called for in the report. I am especially supportive of the report's recommendation to engage an external expert and establish an independent monitor to ensure that the agency's efforts are tracked and that accountability is enforced. I also believe that Chairman Gruenberg has accepted responsibility for his and the FDIC's past failings, and that he is fully committed to lead the agency in taking the actions necessary to make it a safe place for everyone to work. Thank you. I'll be happy to answer any questions.
Thank you, Mr. Sue. Chair Gruenberg, you offered an action plan last year to fix the agency, but last week's report made clear much more is needed. One particularly concerning item is the third-party report that some employees don't believe that last year's action plan will bring about real results. They said, quote, they reported experiencing or observing interpersonal misconduct by a number of the managers currently participating in the action plan. Pretty egregious statement. Yes or no, can you commit to us today that you will review any accusations of misconduct against the managers charged with developing the action plan, and take strong, appropriate action to hold them accountable?
Yes, Mr. Chairman.
Okay, thank you. What do you say to the employees who, understandably, considering the years of history, this agency, what do you say to the employees who don't trust the steps you're taking to reform the agency?
Mr. Chairman, we are committed to implementing the recommendations of the new report and to making fundamental structural change in the way misconduct is addressed at the FDIC. Most fundamentally, and I think this gets to the core of the issues raised, we have to cut the good old boys network that is serving as an impediment to employees coming forward and reporting experiences of abusive treatment. And we can do that by establishing a new independent office at the FDIC outside of the existing organizational structure, accountable directly to the board, that would assume all of the responsibilities for dealing with misconduct at the FDIC. That would include receiving complaints from employees, providing employees the support and protection and assurance against any concerns about retaliation that is necessary for employees to come forward. It would assure independent investigations of complaints by outside third parties. And it would impose a strengthened disciplinary process that would be swift and sure and transparent and have only one focus: justice for the victim. And if we can do, when we do, those three things, that will make a dramatic impact on how these matters are handled at the FDIC. We have, as the report notes, existing offices with those responsibilities. Those offices have failed. And we need to move to a new office outside of the existing structure that will provide the kind of independence and assurance that our employees need to hold individuals accountable for misconduct that may occur.
Understanding your credibility starts by ensuring that managers accused of wrongdoing are not allowed to police their own behavior. It starts with that. You understand that. Mr. Gruenberg, as you know, making the fundamental changes necessary to repair FDIC reputation, more important, the culture, equally important, the culture, is going to take input and action from everyone at the agency. How do you plan to engage regularly with the entire workforce, particularly employees who have reported harassment, reported discrimination, reported other misconduct, to make sure you bring about lasting change and end this good old boy network you mentioned, this toxic culture that permeates the agency?
From the outset of our efforts last December to address these issues, we have made this an agency-wide effort. We have invited employees across the agency through expressions of interest to volunteer, to participate in our efforts to address this issue. We have had significant response from employees both in Washington and in our regional offices, and we are committed. I think it is critical for employees across the agency to participate and have a sense of ownership in terms of our efforts to address these issues. I think that's critical, and we have worked closely with all of our employee resource groups. They have had direct input and participation in developing our action plan and in our response to the recommendations of the new report. So this will be has been and will continue to be an agency-wide effort.
And that means you will commit to bringing all the major policy changes necessary to implement the recommendations of this report, including steps you've outlined here today, to the board for input and approval.
Yes, the board will be the oversight and oversee the governance of this whole effort.
I will be watching, this committee will be watching, Senator Scott will be watching. I was told by a Fed Reserve governor some years ago that he said, watch what I'm doing and make sure you know I'm watching, you're watching what I'm doing. That's loud and clear. Thank you. Senator Scott.
Thank you, Mr. Chairman. Let me turn my attention to Vice Chair Barr for a minute here on I think the importance of Basel III being reproposed. Honestly, I think slicing it, dicing it, trying to figure out how to make some changes and put it back on the market, I think that's probably the wrong strategy, the wrong approach. From my perspective, it would be much better to have a full reproposal, allowing people to have another window of opportunity to actually have input in the process of the changes. Frankly, Basel III to me, thankfully, Fed, you, Chairman Powell have made a prudent decision to take another look at the proposal. That's a prudent decision. I think a better approach is to actually put it back out on the market for comment so that more people have a better engagement in this process. That anything other than that, I think, is nibbling around the edges and will not produce the type of product that is in America's best interest. Thoughts?
Thank you very much, Senator Scott. We're really focused right now on the substance. We had a lot of deep and thoughtful comments on the proposal. We're trying to work our way through that substance now, reach agreement across the agencies and with my board on the substance. And after we're done with that process of understanding where we want to go on the substance, we'll then determine what process we think is appropriate. If a reproposal ends up being appropriate, we'll do that. We're not yet at the stage where we're thinking about precisely what process we'll use.
I certainly think the more, obviously you understand this, but for the Americans watching C-SPAN for reasons that go beyond my ability to comprehend, I think it's important for us to note that the capital standards within Basel III park so much capital on the sidelines that those Americans perhaps watching C-SPAN looking for their first mortgage will have less capital to actually become a part of the American dream, to actually earn equity in this nation by having a home. Those small businesses like me that changed my financial life and the life of my family, specifically my mom's, by starting a business and being successful, that capital that allows folks like me coming from poverty to experience the American dream because you have the ability to get a loan, parking more capital on the sidelines really is a way of disenfranchising more Americans and not necessarily making the system more fair. Thank you for your comments and thank you for the call and having a conversation about this really important underlying issue that will have real impact on our economy. To Chairman Gruenberg, the offices haven't failed. You have. It's that simple. An environment that is so corrosive, so toxic, that employees, I just want to read this from the report because the level of intimidation that is embedded in the culture after a decade of your leadership, you can't just unravel it. You can't unscramble that egg. The going to classes and looking for ways to have anger management and solve that problem. If it takes you a decade to recognize that, perhaps you need a whole few years away from the FDIC to figure that out on your own. But why punish the FDIC and the American people and, frankly, the employees? Here's a quote from one employee. Nobody trusts those in charge. And even though it is not getting into the hands of senior executive, I'm using VPN and someone else's cell phone to write this. I still fear that talking will come back to haunt me. Those are chilling words. I have so many complaints and concerns through the report that it's just hard to read them all. A woman learned that a field office supervisor had romantic feelings for her and would send her flowers. He would demand to know who she was talking to and what she was talking about. He called and texted her at work and at home. During mandatory telework, he would insist that she stay on team videos for hours on end, directing her to leave the video on when she left to use the restroom. She became so fearful, she went to the police and considered seeking a restraining order. She hesitated to file a complaint with the FDIC because she believed the agency would believe him over her if she reported it. Eventually, when she did work up the courage to file, she said managers dismissed her concerns. The report concludes, she continues to live in fear. You got 5,000 employees plus, and the strategy is to give them more pay, more promotion, and to transfer for folks maybe in leadership. If after a decade of toxicity and corrosion, 5,000 employees, the best we can do is find a scapegoat, shift the blame, you should resign.
Thank you, Senator Scott. Senator Cortez Masto is recognized.
Thank you, Mr. Chairman. Thank you, gentlemen, for being here. I'm going to focus my questions today with Director Gruenberg. I appreciate you coming in to visit with me. Let me start here, and you're hearing this constantly. Obviously, this is an opportunity to do right by the employees of the FDIC. There's almost 6,000 employees of the FDIC. And there is no doubt that an environment, a workplace that has long-standing misconduct, harassment, discrimination, and lack of full accountability at the FDIC is absolutely unacceptable. Now, here's the concern that I have. This has been long-standing. This has been long-standing, and words are not enough now. You can come here and testify and talk about what you want to do, but we've heard that before. I've heard that under previous administrations, previous chairs, previous leadership. In fact, we have a previous report that came out that absolutely from the Office of Inspector General, July 2020, identified these issues, recommendations were made, and I will say even at that time, the leadership, it wasn't you, but the leadership at the FDIC questioned some of those recommendations. Now fast forward, we still have an issue. It's not just about structural change, it is about a workplace culture that we need to address. And I do believe that if you are paying attention to what is happening here and you've read the root analysis, you've read the report from Cleary Gottlieb, and you've read the recommendations, there is a clear blueprint for what to do. And our goal here and mine is to hold you accountable for that. And the entire board and the entire leadership. Because now's the time to focus on the employees and their workplace. Let me just say this. The root cause analysis, lack of accountability, failure to hold employees accountable for misconduct, that was addressed in the previous report, how it still hasn't been addressed. Employees do not see individuals alleged to have engaged in misconduct face any consequences. They also develop doubts about the integrity of the disciplinary process itself. Fear of retaliation. And that's just the structural changes we need to make. Now we have workplace issues. Let me just say, the workplace culture has to be addressed, and you're going to have to come forward and tell us how you're going to do that. Let me just note this, though. In the report, it notes that the FDIC and its leadership have not sufficiently focused on and prioritized workplace culture, and historical efforts to address it have not been sustained in any way to make lasting changes. It is not the case, as some have expressed, that problems related to the workplace culture, including with respect to sexual harassment, only came apparent through the recent media reports. There have been prior cultural change and improvement initiatives that the FDIC have instituted in part because of some of the same issues identified in the report, going back to 2008. This is a systemic failure over the years. And it is time to take action. So my first question to you is, based on the recommendations from this report, Do you anticipate, and I hope you say yes to every single one, that you're going to implement every single recommendation that is in this report, this Gottlieb report? One of the recommendations to address the cultural transformation is to hire an independent individual to monitor and audit any recommendations the FDIC adopts. You agree to that? Let me just say, okay, that secondly, there is also a recommendation that the FDIC should retain an independent third party with substantial and credible experience in the topics uncovered by this report to advise in the implementation of the recommendations. That's a separate independent third party. Do you agree to that?
Yes, and we've begun the process of implementing both of those recommendations, Senator.
So how do you anticipate, let me ask both of you, because Director Sue, you're on the board. How do you anticipate not just the cultural changes and the structural changes, the structural changes that you're talking about, how do you anticipate changing the culture? This is not about words anymore. This is about showing action to the federal employees there that you're doing something about it. So what are you specifically going to do?
If I may start, and maybe then Mike could add. Those are the hardest because you have to change people's attitudes and behaviors, which is the hardest part of this work. I believe the structural changes are critical, both in independence and giving employees a sense of confidence and protection to utilize them. We have a key additional structural issue, which is the decentralized nature of our organizational structure with 3,000 banks we supervise, 70 field offices around the country.
Let me ask you
getting
this.
Control.
Let me cut to the chase because my time is running out. Have you held anybody accountable so far?
Yes, 4 employees have been separated this year, and we've made management changes. And as a result of this establishing a new office, there will be additional management changes. And we've started a program of training, in-person training for all 6,000 employees at the FDIC. We began with the managers of those 70 field offices, which is, in some sense, the locus of the issue. We've had all of our senior executives, including myself, go through that training, and we are now working through the rest of our workforce. By November of this year, we will complete that in-person training for every employee. So at a minimum, we'll have a baseline of understanding for every employee. What is sexual harassment? How to recognize it? And most importantly—
I appreciate that, Mr. Gruenberg, but it's more than just training.
I understand.
It is more than just training.
I
That's
understand.
the start of it.
I agree.
So you've got to do more. And I apologize. I'm going over my time, but this is such an important issue. And Mr. Sue, you're on the board. What are your thoughts on this? Because there has to be a change in the workplace culture. It is more than just training for individuals.
It's imperative that every single recommendation be carried out in full, in a timely manner, immediately. And those have to be actions that are credible to the staff of the FDIC. In particular, the fear of retaliation creates a cycle. Because if there's a fear of retaliation, there's no reporting. If there's no reporting, there's no action. And so this is made very clear in the report. And I agree with you. This is all dependent on actions and outcomes. And I think that's where the focus has to be.
Well, I'm done, and I thank you for allowing me to go over my time. I'm just going to say this. This should be the last report we deal with on this particular issue, and we are going to hold you accountable. The entire board, the entire management, FDIC, you need to make changes. And this is something that clearly has happened over years and decades, unfortunately, but it's time to make the change, and we need to hold you accountable. From my perspective, I'm not going to let go. This has to change. Has to change.
Thank you, Senator Cortez-Masto. Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. Mr. Gruenberg, yesterday my House colleagues and today my Senate colleagues have all been taking you to task on how under your 19-year tenure you have failed to protect employees and create a culture of professionalism at the FDIC. Instead of that, your agency is known as a place that fosters a culture that is, in their words, misogynistic, patriarchal, and outdated. a place where favoritism is common and senior executives with well-known reputations of inappropriate workplace behavior enjoy long careers with no consequences. You, in fact, are one of those senior executives who have subjected employees to bullying and your explosive temper, which are detailed in multiple pages of this report. 91, 92, 93, 94 are all included, and yet you have faced no consequences. Culture starts at the top. Now, those aren't my words, Mr. Chair. Those are the words of the employees at the FDIC, and you can read that on page 6 of the report. Your employees clearly have no faith that you can meaningfully lead for changes at the FDIC, and quite frankly, neither do I. I think that you should resign for the good of the institution. Mr. Barr, in agreement with the Chairman Powell, you have stated on page 5 of your written testimony that you expect a series of broad material changes to the Basel III endgame proposal. I think myself and many members of this committee would welcome that. Do you agree that each section of the proposal, covering all 3 risk stripes of the market risk, operational risk, credit risk, that they need broad and material revisions based on the comments that you have received?
Yes, I think if you look across all 3 areas, I do expect some significant changes in the proposal.
And by definition, the material in this particular case does mean significant change. Would you say the commenters that have made, and there's been a lot of comments made, do you think they'd be able to anticipate all of the potential changes that you're considering?
We're going through the substantive work now. If we find an area where the Administrative Procedures Act would suggest that we haven't met that standard, that would be one of the factors we'd think about process going forward. But right now, we really are just focused on the substance, making sure we get the substance right, and then we'll turn to the question of what's the right next step in the process.
But fair to say, and I believe probably 97% of all of the comments that you received were not favorable to the proposal that you were making. And the vast majority of them wanted you to simply eliminate it, or they wanted substantive, significant changes within those proposed regulations. Would that be fair to say?
I haven't done that calculation. I've heard that number reported before, but I haven't myself looked at that.
Naturally, the reason why I'm asking the question, and I think you're on it, is that you may very well have to withdraw and repropose that proposed regulation if these are significant changes, so that there could be other comments made in the future. Would you agree with that?
As I said, we haven't reached the question yet of what the right process is. We're really focused on the substance. We're working our way through that. After we reach a conclusion about the substance, we'll turn to the question of what the appropriate process is from that point on.
But you do expect, as I think both you and the chairman have indicated, that you would probably have significant changes to the proposal.
Yes, Chair Powell and I have both said we expect broad material changes.
And I noticed that you indicated that that would trigger additional administrative or actions under administrative procedures at this time.
What I said, Senator, is that we haven't made any decision about the process. We'll follow the Administrative Procedures Act. We'll take care of whatever the appropriate process is, but we haven't reached any judgment about the process at this time.
Okay, and then I'm just curious. I think yesterday with the House Financial Services Committee, you indicated that policy changes to the proposal, just as you've indicated here today, that they haven't been finalized yet. But as you go through and you're trying to identify this, has there been a framework or a term sheet or some sort of a layout, laying out the differences or the contours to changes that other agencies that you're working with, that they've been able to see and to work over?
We're working very closely. I'm working very closely with my sister agencies at the FDIC and OCC on a set of reforms to that proposal, and also in discussions with my board.
If you do have that, would that be available to this committee for review as well?
That's not a normal process that we would conduct. We go through the process among the agencies. We develop whatever substantive proposal we are, and then we put it out for the public to comment. And then, of course, we welcome, as we have in this instance, comments from senators and from members of the House. Those comments that we get from this committee and from others are part of the comments that we review when we evaluate our proposal.
Well, most certainly, as substantive this may be for changes, it seems like it would be appropriate for this oversight committee to at least have access to the questions that you may very well be asking other committees, or at least if there's a working worksheet of some sort, it seems that that would be fair game to at least share with us as well.
Senator, as I said, the normal process here in administrative rulemaking is to conduct it the way we're conducting it, and I expect we are going to continue to conduct it according to the normal process.
Thank you. Thank you,
Thanks,
Mr. Chairman.
Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. Mr. Gruenberg, I'm not going to echo what all my colleagues have said. Behavior's got to change. It needs to be a meaningful plan. I think some of us have withheld full comments or full calls the way some of my colleagues have. But the plan has to be real and credible. So far, we've not seen that. I also want to build Mr. Barr on the somewhat where Senator Rounds is going. You know, I've written you separately on the Basel III Accord. I think the reason why there's been such pushback is that, at least early on, there was not kind of the evidence-based documentation of what would be the cumulative effect of these rules, these rule changes, particularly in terms of credit availability. So I hope before the final rules are come out, you would make those estimates public. I mean, I think, again, echoing what Senator Round says, we need that from an oversight standpoint. And I do hope, again, that there will be an evidence-based indication of the risks and benefits of these proposed rules. I know you're going through a reworking process. I know it's probably caused lots of consternation. I've talked to you and Marty and others about this. But we need, wherever you come down, we're going to need that evidence-based approach. And I don't think in the initial rule proposal it was there. I want to actually, this is going to be mostly directed at Mr. Hsu, since I had from Mr. Barr and Mr. Gruenberg. I asked this the last time. I think one of the things as we deal with thinking about a rule structure for our banks, particularly around liquidity problems, the way we saw with SVB, it really taught us that the whole notion of stability deposits and the notion of internet-based runs, that we're way behind where technology has taken us. Obviously, we need to make sure that we have ability to prevent temporary liquidity issues from turning into solvency crises. And one of the things that has bothered me, and I've shared this with all of you, I've shared with my colleagues on the committee, is the whole beginning of the Fed, the discount window was set up exactly for this circumstance. But what we've seen is, at least recently, is very rarely played that role. So, and I say this to my colleagues on both sides, I'm going to be soon introducing a bill, and I've been talking to some of my Republican colleagues, and welcome my Democratic colleagues as well, to reform the discount window, to fight the so-called stigma that goes about utilization if you use it. I think this really ought to be, back to the beginnings of the Fed, a more often used tool. Now, the bill will implement a mandatory discount window test borrowing with different tiers and an exemption for those institutions under $1 billion in assets, and again, other safeguards to make sure we don't put too much undue burdens on small depositories. But it would also require that institutions demonstrate that they can use the window. The SVB didn't even have procedures set up. And then give regulators, allow them to give proper credit in liquidity evaluations for institutions that do that. I think we need to look at how we keep the liquidity window open at a longer basis. And I'm wide open on how we can do other things to try to remove the stigma issue. And what the legislation also tried to do, promote a more harmonized process across the Federal Reserve banks and better coordination between the Fed and the home loan bank boards. Again, to make sure that we can get this right. I got your colleagues' comments on this. We've had a private conversation on this, but I would like you to share whether you think this kind of approach in terms of making the liquidity window, destigmatizing it, making sure institutions know how to use it, and modernizing it would be a step in the right direction.
Absolutely. I think it helps to step back and remember what the problem we're trying to solve is, which is that bank runs are faster. And because bank runs are faster, that ability to be able to use the discount window when a bank has appropriate amounts of collateral to be able to do so in a safe and sound manner is critical. So all the steps you laid out, we are happy to continue engaging with you as to how to frame that so it's effective. It is tricky. It's a tricky problem to solve, but we're committed to working with you to solve this problem because we do need to solve this if we're going to address the speed of bank runs.
Well, I know my time's expired, but I've invited any of my colleagues to join me on this. I think before we start adding new regs and rules, we ought to make sure some of the tools that were set up in the first place are more fully used. Thank you, Mr. Chairman.
Senator Kennedy of Louisiana is recognized.
I hope Senator Al Franken is watching today. If it weren't for double standards around this place, there wouldn't be any standards at all. Mr. Gruenberg, have you ever heard the expression, a fish rots from the head down?
Yes, Senator.
I understand I listened carefully to your testimony. Do I understand you to assert that you believe you're the person to clean up the FDIC?
I do, Senator.
Do you also believe that Elvis is alive?
Not to my knowledge, Senator.
Do you also believe in Bigfoot?
No, sir.
Have you read this report?
Yes, sir.
You've been the chairman of the FDIC 10 of the last 13 years, haven't you?
Yes, I have.
And you've been there for 20 years almost, haven't you?
Nearly, yes, sir.
And this sleaze has been going on for decades, has it not?
I think the report makes that finding, Senator.
Did you read the part of the report where one of your supervisors described one of your young female employees as being, quote, like a grizzly bear with tits, close quote?
I've read the report, Senator.
Did you read the part of the report where one of your supervisors asked a young female employee, quote, does your husband eat you? Did you read that?
I have read the report, Senator.
Did you read the part of the report where one young employee said her supervisor sent her a text? You know what the text said? Quote, get naked, bitch. Did you read that?
Yes, sir.
Did you read the part of the report where one of your supervisors turned to one of your Hispanic employees and asked him to recite the Pledge of Allegiance to prove that he is an American? Did you read that?
I read it, sir.
You're not going to be able to clean up the FDIC because you're going to be too busy defending yourself in court. I'm going to introduce a bill to extend the statute of limitations to allow every employee at the FDIC to file suit over this sexual abuse and this sexual discrimination and this racism. And you're going to be spending all your time in court. Now, the Cleary Gottlieb report doesn't think you're the person to clean up the FDIC, does it?
I don't know that the report reaches that conclusion, but it certainly has critical comments in regard to me, Senator.
Well, I mean, the FDIC report says that it says that even your senior leaders feel, quote, disrespected, disparaged, and treated unfairly by you. Did I quote that correctly?
Yeah, I have read the report, Senator.
And the Cleary Gottlieb report, it goes on to say that your long tenure and reputation for losing your temper and bullying people, quote, presents unique challenges, close quote, for you to change the agency. Did you read that part?
I have read it, Senator.
And the Cleary Gottlieb report also says it questions whether you have the, quote, moral authority to do so. Is that correct?
I have read the report, Senator.
Yes. You fixing this agency, Mr. Gruenberg, is like asking Alec Baldwin to conduct a course in gun safety. You ought to be ashamed of yourself. And Mr. Sue, you ought to be ashamed of yourself for acting like a lickspittle here today, trying to defend this gentleman. Have you ever read a worse report, Mr. Gruenberg, in all your years?
It's a bad report, Senator.
Yeah, it's bad. Look, I could go through this report. I'm embarrassed to have to even read some of these allegations. These folks on the first row behind you, are they FDIC employees?
Some of them are, Senator, yes.
Would you like to turn around and apologize to the female employees sitting behind you at the FDIC?
I have, Senator.
Would you like to do that now?
If you ask me to, I will.
I think you should.
I apologize.
And now I think you ought to resign. I'm done, Mr. Chairman.
Senator Smith from Minnesota is recognized.
Thank you, Mr. Chair. It's ironic to me that my Republican colleague thinks that Chair Gruenberg can't do his job because he will be in court when his candidate for president is currently facing multiple indictments and is actually in court. Chair Gruenberg, you and I have had a conversation about the FDIC, and as I said to you when we last spoke, I believe that it can be your legacy to repair the damage that has been done to employees at the FDIC, and knowing the agency as you do, you have the potential to make the changes that need to be made in this agency for the good of everybody there and for this agency that I do believe that you care deeply about. And as you have heard, we will all hold you accountable to that. Mr. Barr, I wanted to direct a question to you and really to everybody on the panel. And this is to do with what is happening with home insurance rate surges around the country. So homeowners have seen their insurance rates surge in recent years. And why is this happening? It's happening because of bigger, more destructive, and more frequent severe weather events. And this, of course, is the cost of climate change, and it's hitting homeowners hard. A recent study by LexisNexis found that 97% of catastrophic losses to homeowners in 2022 were caused by hail and wind and weather-related events. Now, so you're probably thinking this is a big problem for states like Florida or Louisiana or South Carolina, and of course it is. It is a huge economic problem, but you may not know that it is a huge issue in the Midwest. From 2016 to 2022, my home state of Minnesota incurred the highest loss cost of any state for severe weather events. And so what does this mean? It means that insurance companies are not keeping up. the cost of this rolls down to homeowners in the form of massive rate hikes, high costs to pay for improvements on their properties, or worst case, they just lose their property insurance. So my question is, obviously these spiking costs for property and casualty insurance are an issue for homeowners, but it also seems like it could be a big issue for financial institutions who need to manage this risk. Would you agree with that? And just tell me how you see this issue panning out as a systemic risk.
Thank you, Senator. It's an excellent question. We do look carefully at the way in which the largest banks are managing these kinds of risks. We recently went through an exercise with 6 of the largest banks to understand their risk measurement and risk management practices. And one of the things that the banks learned through that process, many of them, is that they did not have complete information about how their properties were covered or were not covered by property and casualty insurance. And that, of course, affects losses to the banking sector. So it is a really, I think, quite critical issue.
The prospect of, trillions of dollars of properties becoming uninsurable because of this risk seems to me to be something of significant concern. And I think it's very important that as regulators, you look at this issue and you think clearly about what that might mean in terms of a systemic risk. I also want to ask you about the Community Reinvestment Act. You know that this is something that I've been paying a lot of attention to. I care a lot about this. I think that the recently finalized updates to the CRA were important and long overdue, and so I'm dismayed, of course, that the rulemaking has been struck down by this activist judge in a case where I think plaintiffs were clearly shopping for a friendly judge. I'm not asking you to comment on that, and I understand with pending litigation you can't comment on that, but I wonder if you could maybe clarify a few things about the rulemaking itself. First, it is true that this was the first update to CRA regulations in about 29 years. Is that right?
That's correct.
And since those old rules, there's been many significant changes in banking, correct? I mean, the big shift to mobile and online banking is just one example.
Yes, Senator.
And these new rules take into account how remote lending works. Is that correct?
Yes, the rule does do that.
And is it also true that these new rules they're not overly inclusive? So, for example, they don't pull in community banks that still largely operate locally.
Well, the particular provision with respect to outside lending areas applies to large banks that don't have large branch bases, so they're doing a lot of remote lending.
Right. Thank you. I think that it is just important that we understand that a very thoughtful, in my view, and tailored approach has been taken with these CRA rules that reflects the realities of banking today, and I hope that they will be allowed to go into effect. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Hagerty of Tennessee is recognized. I will give you 5 extra seconds, Senator Hagerty.
Vice Chairman Barr, I understand that last week you spoke to graduates of American University. And I'd like to call up part of your remarks for the group today. Quote, when things go wrong, it's your responsibility. It's not somebody on your team's fault. Having the ability to not point a finger at other people and to point it at yourself and understand that you are accountable and responsible is an important part of being a leader. Does that advice extend beyond college graduates to leaders of federal agencies?
Yes, Senator.
I agree. And when a leader's team or agency is fundamentally broken, serious decisions have to be taken. Decisions that will provide a stark test of what leadership really is. So, Chairman Gruenberg, I'd like to turn to you to talk about accountability and leadership. During the independent investigation of your agency, roughly 1 in 10 FDIC employees reported, quote, experiences of sexual harassment, discrimination, and other interpersonal misconduct. Just the sheer volume of complaints demonstrates serious managerial issues. A workplace culture like this doesn't evolve overnight. This is shaped by years of senior management. The report even says, and I quote, culture starts at the top. Well, you've been at the FDIC for nearly 20 years. 10 of the past 13 years, You've led the agency. So my question is this. If the FDIC's culture is the problem, and you've established this culture for nearly 2 decades, how could you possibly be the most capable person to fix this rot?
Senator, I have indicated that I take full responsibility. I've also indicated that one of my failures was not recognizing the deep-seated cultural challenge the agency has previously. Since last December,
Previously, you've been there for 20 years. I don't know how you could not recognize it.
since last December when these reports came forward, we have devoted all the resources of the agency in an agency-wide effort to address them. I've indicated, and the third-party report that was released last week was a result of my direction to have an independent third-party review, look at the agency in whole, both Washington and the regions, to try to develop an in-depth understanding of the nature of the challenges the agency has.
Well, let's get beyond the reports and the understanding. Just yesterday, very concerned about this, a report emerged that contains a statement from FDIC employees that very clearly says, and these are employees across the political spectrum, they don't believe current leadership can affect the necessary changes. They even left it unsigned because they're afraid of reprisal. That's precisely one of the issues, one of the deep cultural issues that we're trying to address here. Leadership is necessary to do it. They don't believe you can provide it. You know, this is just extraordinarily hard for, I think, all of us to understand. I want to ask you a different question. If you were to resign your role, who would take your place?
I think under the statute, the vice chairman would become acting chairman.
Is the vice chairman a Republican?
I believe so, Senator.
So I think now we're getting to the very core of what's happening here. This is what's going on. Just yesterday, in a House hearing, Representative Presley from Massachusetts said the quiet part out loud. She said that if you were to resign, it would, quote, jeopardize critical regulations pending finalization at this agency. Just let that sink in. The need for immediate leadership change here is so obvious. The independent report here is beyond disturbing. It describes abuse, discrimination based on race and sex, uncontrolled anger and retaliation. It even reports instances of sexual harassment and rape that occurred at the so-called FDIC hotel across the river in Virginia. It's truly remarkable that anybody on this committee would be willing to ignore this report and what it so obviously requires, all for a few regulations in the Federal Reserve. Does the Me Too movement now have an exception for technical regulations? Chairman Gruenberg, is saving your job more important than protecting the staff and the integrity of the agency that you lead?
Senator, I have no higher priority than addressing these issues and protecting the employees of the FDIC.
They don't believe you can do it.
We've been working since...
I don't believe you can do it.
I believe we can. We have been working on it, and it has been an agency-wide effort.
This is the most damning report I've ever seen. And I can't believe there's a willingness of anybody on this committee to brush this under the table just to get a regulatory agenda passed. Thank you, Mr. Chairman.
Senator Butler of California is recognized.
Thank you, Mr. Chairman, for holding today's hearing, and thank you to all of our witnesses. First, I do want to note and appreciate Chair Gruenberg, the number of conversations that you and I have been able to have, and I want to state again that the findings of this report are deeply disturbing and unacceptable. Now, as has been noted from everyone on the dais today, these are cultural challenges and experiences that have been happening for decades across multiple administrations, Republicans and Democrat. The examples that have been provided in the appendix to the Gottlieb report are truly jaw-dropping. Women, people of color, the LGBTQ employees, among others, have been harassed, have been abused, all during their employment. You've heard from my colleagues that we're expecting more from you We expect that you will be doing the work and taking the steps to right the ship and to restore the credibility of the agency. I also expect that my colleagues from both sides of the aisle will be consistent in their commitment to investigating and holding perpetrators to account of perpetrators of sexual harassment to account and abuse, whether they serve at the FDIC or they seek to occupy the Oval Office. It's been interesting and a bit perplexing to listen to my colleagues mention the notion of double standards, but also experience how they have not and will not call out the behavior of the former president, who not only is in court today, but finds himself having already been found liable for sexual assault. It simply cannot be that this behavior is disgusting and unacceptable for a manager at the FDIC, but it's willfully ignored and therefore excused for a person who hopes to actually be the next president of the United States. What incredible hypocrisy. I do have a question for you, Chair Gruenberg, on the report. As I noted, one of the many tragic elements of this situation is that I fear it sets us back in the progress that we've made to bring more women and people of color into senior roles in banking and financial services. What are your specific efforts as a part of the action plan that speak to those women and people of color and members of the LGBTQ+ community, that the FDIC is a safe place for them to work?
Thank you, Senator. That's a crucially important question from my standpoint. As part of our action plan, as you may know, we have a task force of female leaders at the FDIC developing a strategy for strengthening our recruitment efforts specifically for women and employees of color. They've been working diligently on that. It's a supplement to our existing efforts, and we've had extensive recruitment efforts. It's been a priority of mine since I've been at the FDIC to expand diversity and inclusion at the FDIC, and it's a core objective of our action plan.
Thank you for that. I have noted to you in our previous conversations that, in my opinion and experience, plans are only valuable when they make their way off the shelf, and the oversight that is required. I would expect that we would hear from you, the monitor, and other independent oversight agents that you are employing as a part of the report to be reporting back to this committee, whether formally at the table or in writing, much more frequently as the implementation moves forward. Mr. Barr, I would like to offer a question moving from my responsibility as a national representative here to truly focusing on the people of California. When the Silicon Valley Bank failed in March of 2023, millions of dollars in loans for community projects, including affordable housing projects across California, were jeopardized. After purchasing SVP, First Citizens Bank committed to expanding its community support in California, including the provision of community reinvestment grants for an affordable home mortgage subsidy program. Can you talk about how the Fed has been working with the San Francisco branch to ensure that those supervisory failures are actually moving forward in your ways of oversight to ensure that those commitments to those affordable housing projects are being followed through?
Thank you. We are taking several steps to improve supervision across the Federal Reserve, including making sure that our risk profile feeds into the way in which institutions are supervised, so that as institutions grow in size and complexity, they are supervised more intently. We're working on our escalation framework to ensure that matters are escalated promptly and that banks and supervisors take action quickly when that happens. So these are the the kinds of measures that we're undertaking to make sure that supervision is improved in the future.
Thanks, Senator Butler. Senator Vance will.
Thank you, Mr. Chair, for hosting the hearing, and thanks to the three witnesses for being here. I know that most of my colleagues have focused their attention on the report of some pretty troubling personnel management over at the FDIC, from sexual harassment on down, and I share their concerns. And what I want to focus on today is whether some of the problems that have been identified at the FDIC, Chair Gruenberg, actually make it harder for the FDIC to do its very important job in our financial system. And to pick a particular hobby horse, something I've been focused on, as you know, in our private conversations and our public conversations, we have a massive problem and a divergence in public information, public reporting on the failure of First Republic and how it was sold to JP Morgan. And unfortunately, we also have a troubling lack of forthrightness from your agency about some of the underlying justifications for why JP Morgan was allowed to purchase First Republic instead of some of the regional banks that were interested in purchasing it, or instead of another option, more specifically liquidation. So I want to sort of just drill in on something. So in public and in some of our conversations, Chair Gruenberg, you have said that the difference between the loss, if First Republic went to JP Morgan versus a regional bank, the loss spread was $20 billion. Is that correct?
That was one estimate, Senator.
That's one estimate. Other estimates that have been out there have the loss ratio or the loss spread at $1 billion or substantially smaller. And one of the things that I did with Senator Warren, one of the rare acts of bipartisanship on the Banking Committee, is that we sent your office a letter trying to sort of better understand what estimates and what data points went into the least cost analysis that you use to give or to ensure that JP Morgan was allowed to buy First Republic Bank. Now, Chair Gruenberg, what was the FDIC's loss estimate for First Republic's single-family residential portfolio? Do you remember that?
Not offhand, Senator,
Okay.
but I'd be glad to follow up with you.
So happy to jog your memory. So FDIC staff turned over information that suggested your estimate for the single-family residential portfolio of First Republic, the loss there was $30.3 billion, obviously a massive amount of money. Now, based on information that my staff has uncovered, sometimes with cooperation of the FDIC, and sometimes, Chair Gruenberg, with the absence or the opposite of cooperation from the FDIC, we think there's a good amount of evidence that the actual loss in First Republic's single-family residential unit was closer to $11 or $12 billion. In fact, a number of the regional banks who made purchase inquiries for First Republic thought it was closer to $11 or $12 billion. So if you, on the one hand, think that the loss in that one portfolio was $30 billion, and the actual answer was more like $11 or $12 billion, would that lead to a significant difference in how you evaluate the least cost test?
It might, Senator. I don't know offhand the basis for the two estimates. Would obviously have to evaluate that.
So one thing I just want to sort of drill down on is your estimate for the loss from liquidation was $16.2 billion, and the JP Morgan acquisition was $13.6 billion. Now that's a difference of less than $3 billion. But if you assume that the loss in the residential portfolio was $11 billion or even $15 billion instead of $30 billion, the least cost test would have led you to liquidation. And here's the thing that I worry most about. So, Chair Gruenberg, why haven't you responded? Why hasn't the FDIC, why hasn't your staff responded to so many of the inquiries that we've made? Some of the information that I just read back to you is based on conversations with your staff. Some of it is based on conversation with banks or with other offices or with other financial regulators, because the FDIC won't actually answer our questions. And to sort of make this point more specifically, I worry that the culture you've created at the FDIC makes people terrified to answer honestly. And if they're not answering honestly, it's impossible for us to do our job of overseeing the regulation you guys do in the financial sector. So very basic question. Why haven't you guys been more forthright in some of the questions? You just ignoring us? Are you just waiting for more time? Because this is important. I would actually like to know what happened, and I can't figure out what happened because your agency won't give me the answers.
I appreciate the question, Senator. I believe, as you indicate, we've had exchanges. I believe we've tried to respond in writing to the questions you've raised. If they haven't been satisfactory, I'm sorry. We're prepared to engage with you and your staff further if that would be helpful.
Certainly, and I would appreciate that. But just to recap here, Mr. Chairman, I know I'm over my time, so give me, if you would, just a minute here. So to recap, in March of 2023, you and Treasury Secretary Yellen worked with J.P. Morgan to inject $30 billion into First Republic in a bid to save the bank. It was in complete failure. A month later, First Republic failed anyway. You then allowed the concentration in the financial sector by allowing J.P. Morgan to purchase First Republic based on a wildly off-base estimate of some of the losses that existed in First Republic. And when our offices actually try to get information to better understand this, very often we've been steamrolled. If that doesn't suggest a problem in the culture at the FDIC, I don't know what does, and I certainly would love to work with your staff on this, Mr. Gruenberg. I just don't know if you share that commitment. Thank you.
Senator Van Hollen of Maryland is recognized. Senator Warnock of Georgia is recognized.
Thank you so very much. I appreciate the kindness of Senator Van Hollen. Thank you, Chair Brown. Chair Gruenberg, when we spoke last week, I was clear with you that I find this report deeply disturbing regarding the workplace environment at the FDIC, the kind of harassment that employees have experienced there. Among other concerning conclusions, the report details the sexual harassment that happens there, culture that certainly didn't seem to push back hard enough, racial discrimination reported by many FDIC employees. When we last spoke, you told me that you were unaware of these allegations until the Wall Street Journal article was published in November 2023. I have to say to you that I'm confused by this timeline and how that's possible. Can you clarify this for me? What aspects of this toxic culture at the FDIC were you unaware of before the article, and what specifically did the Wall Street Journal shed light on?
Thank you, Senator. I was certainly aware that the FDIC has processes for employees to make complaints, have them investigated, and disciplinary action result if misconduct has taken place. What I acknowledged that this was a failure on my part. What I did not recognize was that there was a deep-seated workplace culture at the FDIC underlying this. And prior to those news reports, frankly, I did not recognize that. Those news reports brought that to light. When those reports came forward, we immediately took action. I requested the third-party review to get a deep-seated understanding of the issue, and that report has just come forward. And we also developed a detailed action plan that we have been working on since last December. But the deep-seated cultural issues that are really at the base of this, that have really now been discussed in the report, I had not appreciated previously.
Yeah, I agree that it's clearly a culture issue, and it's deep-seated. Not only has this kind of workplace sexual harassment and racial discrimination not been discouraged, one could well argue, when you consider the response, that it's been encouraged, which is clearly concerning not only to me, but anybody who's looking at this. From 2015 to 2023, of the 92 harassment complaints made through the FDIC's anti-harassment program, not a single one resulted in removal. reductions in grade or pay or any discipline more serious than a suspension. Of those 92, just 2 resulted in suspensions and 2 in letters of reprimand. So one could argue that this encourages abuse, this encourages harassment, which is a very serious issue. So the FDIC clearly needs a culture shift to be an effective regulator. This has implications for the important work that we count on you to do. Reporting following last year's regional banking crisis detailed a brain drain from the FDIC, and your agency even admits that its persistent staffing shortages have harmed its ability to supervise banks. It's not a nice place to work for a lot of folks. And so you can't succeed if your employees experience a toxic working environment. So I will have more oversight questions for you to answer in writing, but as chair of the FDIC, the Financial Institutions and Consumer Protection Subcommittee, which is oversight jurisdiction over your agency, I want to ask about accountability going forward. This report offered multiple recommendations, all of which you've accepted, but I need a commitment from you to provide me and my subcommittee a written progress report and briefing on these recommendations within the next 90 days.
We would be happy to do that, Senator.
Thank you so much. I wish we had more time. This is a critical issue, but it's important that we all remain vigilant.
Great.
Thank you.
Thanks, Senator Warnock. Senator Brett from Alabama is recognized.
Thank you, Mr. Chairman. Oh, let's get right to it. As a woman, the findings of the FDIC report are particularly disturbing. Hundreds of instances of gender discrimination, unsolicited sexual advances, harassment and assault, and even difficulty being promoted after having children. Let me repeat that individuals within a United States agency denied opportunities for women because they chose to have a family. One employee recounted being told by her supervisor, "You're a mother now. You don't belong in the workplace." That is completely and totally unacceptable. In the 234-page report, I do want to point out a few things. In 2013, OPM analysis said, quote, "The culture of the FDIC permits discrimination and in-group favoritism in relation to promotions and job assignments." Mr. Gruenberg, who was the chair of the FDIC in 2013?
I was, Senator.
Yes, sir. In 2015, a female employee was sent an explicit photo by her supervisor. She didn't report it after being warned, quote, "You don't report, you don't say anything because you end up getting fired," end quote. Mr. Gruenberg, who was the chair of the FDIC in 2015?
I was, Senator.
In 2017, a report of, quote, "a subtle and not so subtle bias against women in the FDIC, particularly women who speak out or dare to ask a question." This woman is going to dare to ask a question. Mr. Gruenberg, who was the chair of the FDIC in 2017?
I was, Senator.
I could go on, but you get the point. The FDIC was created to promote confidence in the American financial sector. Mr. Sue, do you believe that an agency described as misogynistic, abusive, toxic, instills trust and confidence in the American people?
All the recommendations.
Yeah, yes or no? Does that, if it is described as that, and you have said that you feel like this was an unbiased, non-political report, I have read your words. So my question to you is, do you believe an agency described as misogynistic, abusive, or toxic instills trust and or confidence in the American people?
I believe the issues highlighted.
No,
need
the
to
question
be
is
solved
do
immediately.
you think that instills confidence? If that's the way something's described, the answer is no. Can you not say no? Can you say no? Can you do that?
We
Because
need to
no.
protect
I
people
heard
of the
no.
FDIC.
I heard you earlier. This is actually really disturbing. I didn't expect to have to go back and forth with you on this. It is an easy answer. If an agency is described as those things, The answer is it does not instill trust in the American people. It does not create a culture where women feel like they want to work there, can succeed, which means there's a competency issue at the FDIC. That means when you just heard Senator Warnock talk about the brain drain is because of the culture. What woman would want to go work under these circumstances? The answer is zero. If we want to create a place where women can thrive, where women in the workforce feel like they can balance having a family and contributing to the greater good, it is an honor to work at any of the places that you all work, and the answer to the question is no. So let's try this again, Vice Chair Barr. Do you believe that the agency described as misogynistic, abusive, or toxic instills trust or confidence in the American public?
I think the problems in that report are deeply troubling and
So
unacceptable.
no. Do you agree? No.
I agree that the agency has deep problems that they need to resolve.
Guys, this is really frustrating. Chair Gruenberg, you have been either the chair, the acting chair, or vice chair about 15 of the last 18 years, or 18 years, maybe. I guess those three things. And then the 3 years you weren't one of those two things, you were a member of the board.
Yes, Senator.
As FDIC chairman, your responsibility is the day-to-day management of this organization. As the vice chair, it's to advise the chairman. As the board, is to ensure the day-to-day operations of a qualified management. It is clear that we need wholesale change. And I hope that these people will stop putting your career above the very people that you all serve. You said this is about people, this is about employees. In order to restore confidence, literally, it starts at the top. We need a change. The American people deserve a change. The FDIC was actually created to give them confidence in the financial system, and we need a wholesale change starting at the top.
Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. Everyone deserves a workplace that is free of discrimination and harassment. Chairman Gruenberg, the Republicans who have called today for your resignation are engaged in a purely political exercise. They want to replace you with Vice Chairman Travis Hill, who was the right-hand man to your Republican predecessor, who allowed the culture problems at the agency to fester. Your resignation would do nothing to improve the toxic culture at the FDIC, but it would give Republicans a veto over bank policy. Culture starts at the top, and it is your responsibility to fix this. So let me ask, do you commit to implementing all of the recommendations from the action plan and the independent review?
Yes, Senator.
We will be watching you to make sure that you keep your word on this. So let me turn to the purpose of this hearing. 2023 was the biggest year for bank collapses in our nation's history. In a span of 2 months, we saw the second, third, and fourth largest bank failures ever. Each of you has unfinished business needed to strengthen our financial rules and to prevent another crisis. First, executive compensation. The CEOs of the banks that failed walked away with millions of dollars each after they ran their banks into the ground. The FDIC, under Chair Gruenberg's leadership, and the OCC, under Acting Comptroller Sue, have finally revived a Dodd-Frank rule that would reform CEO pay packages so they do not incentivize excessive risk-taking. But the Fed has not joined them yet. Vice Chair Barr, will the Fed follow the law and join the FDIC and the OCC's proposed rulemaking on incentive-based compensation?
We're committed to following the law, to having an implementing rule under Section 956. We have further work to do.
Let's get it done. Your statutory deadline passed 13 years ago, so I hope you do not allow Chair Powell to stop you from following the law. Second, let's take a look at mergers. Your agencies have allowed the industry to create more too-big-to-fail banks than ever. Acting Comptroller Sue, the OCC's new proposal on mergers
said nothing about how the OCC will evaluate a merger's impact on competition, which kind of misses the point. Will you strengthen your proposal so that it actually addresses competition the way the FDIC's proposal does?
We're working with both the FDIC, the Fed, and the DOJ on exactly that, and we will continue to work on that. We're committed to that.
Good. You have a job to do. I think it's really important that we get this done. Vice Chair Barr, the Fed hasn't put out any update on mergers. When can we expect the Fed to follow through on the president's executive order to strengthen bank merger guidelines?
Senator, we're working with the FDIC and the OCC and the Department of Justice on that matter. I don't anticipate us putting out a separate proposal on this. We're working with the other agencies.
Okay, tick-tock, we got to get this done. Finally, bank capital. These giant banks threaten our entire economy when they collapse, but strong capital requirements allow them to better absorb shocks without needing a bailout from the taxpayers. The Fed released a proposal to strengthen capital requirements on the 37 biggest banks, but the bank lobby has launched an unprecedented campaign to weaken it. Vice Chair Barr, are you still committed to finalizing a strong rule this fall?
I am committed to doing that.
Good. Chair Gruenberg, are you committed?
Yes, Senator.
And are you committed, Acting Comptroller Sue?
Yes.
Good. I'm going to hold each of you accountable for finishing your unfinished business. The American people need you to get this done. Thank you. Thank you, Mr. Chairman.
Senator Daines is recognized from Montana.
Chairman, thank you. On day one of his administration, President Biden said, and I quote, "If you're ever working with me and I hear you treat another colleague with disrespect, talk down to someone, I promise you I will fire you on the spot. No if or buts," end quote. It's interesting, given the findings of a recent investigation into the workplace culture at the FDIC, that Chair Gruenberg, I find that you're still sitting here, still with a job before this committee. How do you reconcile what President Biden said with what's been going on at the FDIC and the fact you still hold your job?
As I've indicated, I accept all the findings of the report, of the recent report, including in regard to my conduct. I've committed to addressing the issue personally, as well as to having our workforce on a confidential basis regularly give me feedback, as well as engaging a executive coach and any necessary counseling. I'm prepared to take responsibility on my part for the findings of the report.
So how do you resolve your boss here saying, "I promise I'll fire you on the spot"? We start first of all with who's been fired so far at the FDIC?
I can tell you, Senator, that this year there have been 4 employees separated from the agency for misconduct. We have had changes of senior management responsible in this area.
Just make sure I know what separated means. Define that.
It means they've either received termination notices from the agency, or before the disciplinary action takes effect, they've resigned or retired, which they're allowed to do under the law.
How many of them have been terminated?
I would want to get back to you, but several of them, but not all of them. I mean, all of them were either received termination notices or other disciplinary action before that action took place. At least not all, some of them voluntarily left the agency.
What I find revealing is that some of the same Senate Democrats who have sought to stake their political identities on fighting against sexual harassment and discrimination are sitting here today and frankly turning a blind eye to the very same abuses that are happening under your leadership at the FDIC. And I think it's another example on full display for the American people of the Biden administration and Senate Democrats talking out of both sides of their mouth. If President Biden was serious about the pledge that he made on day one, he would have already called for a change in leadership at the FDIC. However, it's clear that the president and his party would rather ignore these damning findings out of political expediency. Because without you, Chair Gruenberg, they lose a key figure in their rush to radically expand the regulatory state for little purpose other than to target politically disfavored entities. Chairman Gruenberg, as I alluded in my opening remarks, an independent report investigating workplace culture at the FDIC found the agency you have led longer than any other FDIC director in history has been plagued with sexual harassment, assault, bullying, discrimination, brazen misconduct. Additionally, according to interviews with FDIC employees, you were described as someone who is incapable of controlling their temper, and subordinates regularly describe interactions with you, and I quote, as being extremely difficult and volatile. The findings make clear that serious and systemic reforms are desperately needed at the FDIC. Given your long tenure leading the agency and your clear inability or unwillingness to address these issues, how is it you can sit here and make the case you have the moral authority to continue leading the agency? If we were consistent, the president were consistent with what he said about firing people on the spot, this issue would have been addressed a long time ago. But how do you have the moral authority to continue leading the agency with the incredible list of behaviors and allegations, brazen?
Senator, we have been engaged since the news stories came out last year in an all-agency effort, engaging employees across the agency in addressing these deeply, deeply troubling issues. We have a comprehensive action plan we're in the process of implementing. We've accepted all the findings of the new report and committed to implementing all of the recommendations. We've already started that process. We have engaged, as I've indicated, a broad participation in the agency. We are committed to following through, and I think I can provide the leadership to do that.
Has the president asked you to resign? Yes, but one last question. Has the president asked you to resign?
Senator Van Hollen, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Welcome, everybody. And Mr. Gruenberg, let me start with you. And I associate myself with all the deep concerns expressed in the findings of the report, including those expressed by Senator Warnock. I have been listening to your testimony over C-SPAN before I got here. And I think each of us who ask you this question are repeating the question because we want your personal commitment to following through right away in implementing all of the recommendations. And I just want to say, I think we are going to be watching like a hawk to make sure that this happens. So do I have your personal commitment that you will immediately implement these reforms so that we can change the culture at the FDIC?
Yes, Senator.
We will, I think you hear loudly and clearly that that is going to be an absolute requirement going forward. Vice Chair Barr, I just want to pick up on a couple questions that some of my colleagues have asked, and I want to start with the issue of implementation of Dodd-Frank Section 956. As you know, this was required under the bill that passed over a decade ago now. I'm glad to see the NCUA signal their intent to propose this rule. I know the SEC has indicated they're moving forward. I've not seen any notice of proposed rule from the Fed. Can we get your commitment today that the Fed will quickly begin the process of implementing this law by issuing a notice to proposed rule in short order?
Senator, in discussions with my colleagues, it became apparent that at the board, we believe we need to conduct some further analysis before deciding what steps to take. We are committed to following the law, to implementing Section 956, but we have further work to do.
Well, I know you haven't been at the Fed for the duration of this period, but it has been, we're close to 2 decades. And you agree that this is a requirement of the law, correct?
Yes, Senator, I agree. It is required by the law, and we are committed to following the law.
And isn't 20 years way too long to be making good on a legal requirement?
Yes, in this case, the exact time period is shorter than that, but it is still a very, very long time.
Yeah, right. Yeah, as a matter of years here. I just want to be clear. This is a case where non-compliance with the requirement is a real problem, and a lot of us have lost patience. So I hope you'll communicate that back to folks on the board and your colleagues.
I will, Senator.
On the issue, and I think Senator Smith raised the issue of the CRA and the fact that we've seen a lawsuit filed, a lot of forum shopping going on these days. But could each of you just take a moment to describe the due diligence you each went through in coming up with the rule? Obviously, this rule was way outdated. A lot of changes have occurred in the banking system. And it's also my understanding that you looked at the comments from all the stakeholders before issuing the rule. So if you could just emphasize what process you went through and why you think this upgrade was necessary, starting with you, Mr. Barr.
Thank you, Senator. The Community Reinvestment Act has been absolutely critical for helping low and moderate income communities all across the United States. And the rule that we finalized really took into account comments from communities all over the country, from bankers of all sizes, from community organizations and civil rights groups. Staff worked for several years overall on this process, really to get that input in advance and to take it during the comment process. And I think the final rule is really a win for everybody. It really will help bring communities along in ways that have been really just essential for the future of our country. So I think the staff and the agencies did really extraordinary work to make sure that it was a lawful rule and an impactful rule.
Thank you. Just very briefly from the other.
Yes, Senator. After 25 years, it was, and all the changes in the banking industry over that period, it was absolutely essential to modernize and strengthen the Community Reinvestment Act to make it relevant to the changing nature of the banking market today. Failure to do that would make CRA increasingly irrelevant to expanding access to credit, investment, and basic financial services to low and moderate income communities and communities of color across the United States. And the process that went into developing that rule was extraordinary. We went through an advance notice of proposed rulemaking that was developed by the Fed that took public comment, and then went through a notice of proposed rulemaking when we again took broad comment. There was an extraordinary review done of every comment received, careful consideration in the final rulemaking, and it is a sound, balanced, and strong rule that will really make a difference in low and moderate income communities across the country.
Thank you. Mr. Hsu.
The only thing I would add is that the efforts of staff on this particular rulemaking were extraordinary. I've seen a lot of different efforts, and I think it's fair to say that a lot of thought and deliberation went into that across all the efforts that both Vice Chair Barr and Chairman Gruenberg mentioned.
Thank you. Thank you, Mr. Chairman.
Thanks, Chairman Hall. Thank you to your witnesses for joining us today. I look forward to working with you to strengthen our financial system. For senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Thursday, the 23rd of May. To the agencies, please submit responses to questions for the record within 45 days from the day you receive them. Thank you again for your testimony. The committee is adjourned.